There's a lot going on in the crypto industry right now, and we're going to take a look at traditional markets as well. The day right now is kind of flat, down a little bit on all of the indexes right now. Bonds are up a little bit at this time as opposed to yesterday. And again, markets are a little bit down today just because of some economic data coming out talking, about slowing growth and looking for that negative GDP, which puts you into a technical recession. A lot of concern about recession. Powell is talking today and still saying that the risk is that because of multiplicity of shocks that you start to transition into a higher inflation regime. He's worried about inflation sticking, that his job is literally to prevent that from happening, and we will prevent that from happening. The central bank leader said we will not allow a transition from low inflation environment into a high inflation environment. So first, inflation was transitory. Now we're in a low inflation environment. We're not going to let it get high. We are not worried about recession. There is no recession. So these are the talking points coming out of DC, coming out of the Treasury, coming out of the Fed. But there's a clock running where we have inflation running now for more than a year. He said it would be bad risk management to just assume those longer term inflation expectations would remain anchored indefinitely in the face of persistent high inflation. So we're not doing that. So again, he's continually saying that we are strongly committed to using our tools to get inflation to come down. The way to do that is to slow growth, ideally keeping it positive. He still wants to soft land. So he's being, hawkishly dovish, looking for a softish landing. He said, is there a risk we could go too far? Certainly there's a risk. I wouldn't agree that it's the biggest risk to the economy. The bigger mistake to make would be to fail to restore price stability. So like I've been saying, the biggest risk to the economy is higher inflation, not what the Fed is doing right now, because this has been an orderly unwinding of valuations in the stock markets, crypto and everything. I know it seems like big shocks and everything, but it's actually an orderly unwinding. And, back to the tweet that I sent out back on June 18th that we, when a lot of people were talking about bottoms and things like that, if you go into the Bitcoin price, let's look at the daily. And I tweeted this out on June 18th, which was right around this area here, just after that recent lowest level that came in. In fact, it was on the 18th when when Bitcoin hit 17.8, 17.9, whatever that low was, 17.5. I tweeted out, we still have not seen panic selling or mass liquidations. This is a very controlled unwinding so far, lots of denial out there. You will know panic when you see it. We have not seen panic selling. We have not seen full capitulation in the stock markets or in crypto. A couple of responses. Greg is the man, been following him since Bitcoin hit 50K, and he saved me a lot of pain and sleepless nights. Again, I was talking, about the top back in November at Thanksgiving. I told my family, get out, the top is in, and it's time to be defensive and go to cash, unless you can trade a bear market, which is very difficult. This is another tweet for all the crypto kids out there that have no experience in a stock market, recessions. Please listen to Greg Dickerson. You need a different perspective. Greg has been spot on through this crypto downtrend. And that's just experience, and I'm just showing you that just because, a lot of times people say I'm being bearish or, things like that. And really what it boils down to is just experience. So I've been through several cycles. The dot-com bubble, I started my first company. I was an entrepreneur back in 1997. I've been a full-time entrepreneur, serial entrepreneur. I've built up, sold off a dozen companies. I've been investing in real estate heavily and developing real estate since 1997. So I'm a serial entrepreneur, real estate developer, real estate investor, and I also invest in cryptos and stocks. So I talk about all things entrepreneurship, the economy, personal finance, stocks, crypto, real estate investing and development, all that stuff. And I've been through all these cycles with all of that going back to 2001, when a lot of people were caught up in the dot-com boom and they were taking their cash out before the bust and buying real estate with it. And then I watched what happened to a lot of people on the bust side of that didn't get out. And then, the 2008, 2009 great financial crisis, I was heavy into real estate then, didn't really do anything in the stock market then because of what happened in 2000, 2001, when I saw what happened to a lot of people. And at the bottom of 2008-9, that's when I got into the markets hot and heavy and started really paying attention to the stock markets. And I've been in and out ever since, playing these ranges and cycles. And something I want to take a look at today with Bitcoin, we'll just take a look at the hourly here real quick. And it's just, when I say a steadily unwinding, we've looked at this before, where these are just levels, right? Kind of unwinding ahead of the Fed's next move. So, earnings earnings will move markets, and earnings might come out a little positive for some companies, down for others. A lot of that is, price increases because, it's top line sales, right? Inflation is increasing top line sales for a lot of companies, a lot of industries. And, a lot of companies are laying off. They had to lay off during the pandemic. They've been forced to become more efficient, more profitable. So higher prices definitely helps that. And then with the inflation prints that we've been experiencing, CPI and everything, the Fed has to react to that, right? They have to battle inflation, because that, again, is more damaging than any of this to the economy. If they don't get that under control, that'll really, throw the country into a deep, deep recession, where you see so recession is just negative GDP 2 consecutive quarters and can be very mild slowing, or negative growth. A deep recession is mass layoffs, a lot of people unemployed, significant slowdowns in the economy, very difficult for people to find jobs, wages contract, everything contracts. Prices come down too, but so do wages, so do, job opportunities and things like that. So what they're trying to avoid is that scenario, super high inflation creating a super deep recession. That would be the worst case scenario. So anyways, these are the levels, right? So as inflation comes out hot, the Fed telegraphs what they're doing. They're going to raise rates minimum 75 basis points at the next meeting, might be 100. So, we'll get another little leg down ahead of that. Again, we've been getting bounces on the day that the Fed actually takes the action, because the market's been kind of overshooting, right? So it overshoots, it always overshoots to the downside. It always overshoots to the upside, and then it levels off, right? So this is Bitcoin, and traditional markets, react the same way. So this is our hourly. It looks a little more severe on the daily, but again, it's just levels, right? And these levels are, a couple of weeks as it goes through. So if you take a look at the, S&P, same kind of thing, right? It's just kind of steadily unwinding. The S&P looks a little bit more controlled than crypto. Crypto looks a little bit more steeper, at least Bitcoin did. Let's take a look at Ethereum here. Ethereum is obviously, has had some steeper declines, just because, these assets are amplified compared to traditional markets, and there's a lot of contagion in the space. There's a lot of liquidations going on, a lot of leverage out there that has to get unwound. Michael Burry put out a tweet earlier this year that said, if you don't understand the leverage in crypto, you don't understand crypto. And I think a lot of people are starting to see what he meant by that, in terms of companies that were borrowing on assets to buy more crypto, or borrowing on credit lines. And there's just so much leverage in the system that hasn't even started to pop yet. So that's when I say we haven't seen panic selling. We really haven't. This is all steadily unwinding. You still have, Michael Saylor buying, you still have whales buying, things like that, but their averages are, Michael Saylor is trying to bring his, average down with these buys, and his buys are weak, right? 10 million bucks, compared to what he was doing. That's nothing. Cash flow of the company. He can't borrow money to buy anymore. Those days are gone. And, a lot of the leverage that was out there buying those days, that's all gone. You can't do that right now. So that's all the stuff that was propping up the space, pumping up the space, things like that. So that's kind of what you got to keep an eye on. So what we're expecting is, a steady unwind until until we get the CPI print. If that comes out higher than last month, the Fed has to react. You'll see the market drop into that, just like we saw here, just like we saw in the S&P. These drops are reaction to the inflation prints and the Fed meetings and things like that. And I'm not a technical analyst. I just use this to kind of watch price action and just kind of track what the activity of the price is doing. And it's even better when you just kind of erase the noise, right? And just kind of look at this, and you can see what the market's really doing in terms of identifying the trends, the ranges, the cycles, things like that. And I really want to go back to 2019 or 2009, right? So we've just been in a mega bull cycle in all markets, in traditional markets, in the crypto markets, really since 2009. And if you look at this, it really starts to make a little bit more sense of what's going on here. This has just been let's go ahead and put this on log scale. So I'm going to look at it a little bit closer. This is Bitcoin in its entire existence. I mean, that's just a super, mega bull cycle that's been going on, with corrections along the way, because again, crypto is more amplified than traditional markets, right? So if you look at the Dow, over the same period of time, in that 10 years, it's much more of a, linear mega bull market with, these corrections. Bitcoin and crypto are always amplified, right? They always do, 2, 5, 10x what the markets do in terms of these corrections and these pumps, right? Percentage wise. So if you look at Bitcoin, you can kind of see same thing. Let's look at Ethereum. It has a, wasn't around as long, started 2017. At least that's the price action I have. Maybe it goes back before that, but we'll just look at Bitcoin. So this has been that mega bull market with corrections along the way as it hits its peak, just like every other index, when you look at the S&P, since 2009. Because this is when the Fed jumped in, dropped interest rates, and started pumping the markets full of liquidity. And it's just as peaks drop, peak drop, peak drop. It just, not as severe as what's going on in Bitcoin. So what we are experiencing right now in all of the markets is really the first bear market that crypto and Bitcoin has ever seen. Bitcoin and crypto has never seen a bear market. A lot of the people out there that are on YouTube and are trading and they've never been through anything like this. They didn't go through 2000, 2001. They didn't go through 2009. They may not even been around in 2018 when we had that little mild correction. All they saw was the pandemic and that V-shaped recovery coming out of the pandemic because the Fed jumped in and pumped $2 trillion into the economy right here. So there's a lot of people that just, have never experienced anything different than those events, right? So they wouldn't know anything different. So when you start looking at it this way and you take the noise out and you look at the lines, you can kind of see what the market's doing. This is the first real bear market that Bitcoin and crypto, that's the only bear market that Bitcoin and crypto have seen. This is not a correction. This is bear market. And, the Fed has a real job ahead of it. There's a lot of work to be done. We're not anywhere near completion until inflation gets under control and the Fed, can stop. A lot of people are looking for the Fed to pivot and reverse course. The Fed is not concerned with the level of sell-off in the markets. The Fed's concerned with inflation. And as long as the markets don't just completely crash, credit markets, bond markets, or, stock markets, they don't care about crypto at all. They could, crypto can go away. The Fed's not going to blink. But the traditional markets is where, the Fed will pay attention if you see and start to see real severe declines, 50, 60%, then they might do something, buy, some assets or something. They can't pump liquidity in and well, I guess buying would be pumping liquidity, but they can't lower interest rates and back up on that side. They can't stop, those types of things, but maybe they can step in and buy some stocks. I don't know what they would do, just depends on what's broken and what happens in terms of what they'll do. So, those are the things that we're kind of looking at right now. Let's get back on the hourly here, take a look at Bitcoin. And, here's kind of what I'm looking at right now. Again, this is rolling over like we were talking about yesterday versus, a little different of a consolidation here than we saw, at a couple of this level here before that next leg down. It was kind of a little bit of a decline, but more of a steady level, a couple of bounces in there, right? But now a lot of the whales are getting taken out of the game. As we know, 3AC has been taken over and their assets have been ordered to be liquidated. It sounds like this is happening like in real time, but generally when somebody becomes insolvent, an entity becomes insolvent, it goes into receivership, a receiver steps in, like this company here that has stepped in to take over the assets. And you could go on their website and kind of look at it. The company that took over, it's in this article here. I can't remember what the name of the company is, but there's a receiver that has stepped in to take over, protect the assets and kind of liquidate them and then deal with the creditors afterwards. So, I'm not sure, like I said, if this is going on right now. Usually it takes a little bit of time, especially if there's a bankruptcy situation. And you saw with Mt. Gox, how long that took. But a lot of contagion still left in the space. There's a lot of other, potential shoes to drop as the market continues to unwind this liquidity. And we find out, as Warren Buffett says, who's been swimming naked or who's been swimming without any clothes on, which is the same thing, right? If you don't have any clothes on, you're naked. So anyways, that's always, Warren Buffett saying when these bear market situations happen, when the tide goes out, you see who is swimming naked. And, again, it's all about the leverage in the system. It's all about the DeFi system, things like that. So, right now it's defense. We're in a bear market there. It's been orderly so far. We haven't seen real panic selling yet. And, hopefully we can avoid that and just kind of continue to have a slow unwind, giving people the opportunity to get out that want to get out, giving the people the opportunity to buy at different levels if they want to buy. And then, of course, you have those nice bounces along the way if you're trading and you understand how to, manage that. The altcoins we looked at yesterday, some of them bouncing 40, 50, 60%. The lower they go, the higher they can bounce and percentage wise. that makes for some really attractive, swing trades and short-term trades. And that's kind of stuff I've been doing, but you got to be careful. If you get in at the wrong level, you can get caught. So you got to really make sure that you understand what's happening and how, Bitcoin and crypto are following the traditional markets and what's going on ahead of and after the Fed does their thing with the CPI prints. And, if you go back and look at the charts like we showed, you can see that it all centers around those dates of inflation coming out, then the Fed's response to it. So we should be looking for the next leg down here soon. We have the 4th of July weekend coming up in the United States. So that's a 3-day holiday. The markets can be a little funny over 3 days, but last year, it wasn't really eventful over the 4th of July. Again, that was more of a bear market cycle. So these are the things I'm looking at. I'll see you in the next video.